Welcome to the Weekly Market Wrap-Up by Brent Stafford in This Week for Hannah Bernard. Broad-based buying and better-than-expected jobs data propelled markets to all-time highs this week as the Dow, the S&P 500, and the Toronto Stock Exchange all shattered records. What's driving buyer optimism? Let's find out. U.S. indices set closing records each day this week, with the Dow crushing the 17,000 mark for the first time in its history. The Dow Jones Industrial Average jumped 92 points on Thursday to close comfortably at 17,068. The S&P 500 continues to prove unstoppable as it's now tracking a 1,000-day-long correction-free run, with a near 11-point gain Thursday, closing at 1,985. Finally, the Nasdaq hit 14-year highs this week, finishing off on Thursday with a 28-point gain to close at 4,485. Now let's turn to Canadian markets, which topped records as well this week. Buoyed by U.S. market action, the TSX hit an all-time high on Wednesday, closing at 15,209, only to give up some momentum Thursday, dropping slightly to 15,207. The TSX Venture Exchange continued its four-day winning streak on Thursday, gaining 1.72 points to close at 1,037. So what drove markets to new heights on both sides of the border this week? Well, one word: jobs, and lots of them. Two separate jobs reports sent the bulls running. The first on Wednesday, paycheck processor ADP said U.S. private sector payrolls grew by 281,000 in June, far exceeding the expectation of 205,000 jobs. The news drove record buying as investors bet that the labor market surge is real and lasting. Those hopes were confirmed on Thursday when the Labor Department released its jobs report for June, revealing that the U.S. economy added a whopping 288,000 jobs, crushing analyst expectations. The May unemployment rate was also revised, showing a decline from 6.3% to 6.1%, locking in an impressive 5 months of job growth, where the economy has added in excess of 200,000 jobs each month, the first such ever streak since the 1990s. Overall, the total number of new jobs created so far in 2014 is 1.4 million. Also driving the surge in markets this week is good news for both the U.S. and Canadian trade deficits. U.S. Commerce Department import and export data released Thursday shows the U.S. export market is recovering nicely. The U.S. trade deficit with the world narrowed to $44.4 billion in May, driven down by rising exports and a pullback in imports. Exports of automobiles grew 6.1% and consumer goods grew by 2.6%. Also, Statistics Canada reported on Thursday that Canada's trade deficit with the world narrowed from $961 million in April to $152 million in May. Canadian merchandise exports advanced 3.5%, while imports grew 1.6% in May. Now to winners and losers and our picks for the week. The winner for this week is Shutterfly Inc., ticker symbol SFLY. Shares of the online photo sharing site shot up almost 15%, gaining $6.49 to close at $50 on Wednesday. Shutterfly jumped after reports the $1.7 billion market cap company is seeking a buyer and could be attractive to a Google or a Facebook. Shutterfly allows customers to turn digital photos into printed albums and to print photos onto mugs, pillows, and iPad cases. Topeka Capital Markets has a buy rating out on Shutterfly and an $85 price target. Well, that was fast. GoPro Inc., ticker symbol GPRO, was last week's big IPO winner, and now this week it's the big loser. Shares of GoPro fell nearly 14% on Wednesday as the camera maker's post-IPO rally finally fizzled. GoPro had more than doubled from its $24 IPO price after it kicked off trading last week, but the stock fell this week on reports that short sellers are moving in. Long-term investors in GoPro can probably ignore the drop, as the company does dominate the niche market of stunt and extreme sports-based video, and is set to begin collecting money from advertisers, which should give GoPro another valuable revenue stream. Well, those are our winners and losers for this week, and now it's time to check in on the gains you could have locked in by following the weekly watch list from Robert James and Viral Stocks. Well, that's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and the snapshot of what analysts are forecasting for companies whose earning reports are coming out next week. Here are 3 U.S. stocks to watch. First up on Tuesday is Alcoa Inc. with an EPS forecast of 12 cents compared to 7 cents in the prior year quarter. Alcoa signed a definitive agreement late last month to acquire Firth Rixson, a global leader in aerospace jet engine components, for $2.85 billion in cash and stock. Next up on Thursday is Family Dollar Stores Inc. with an EPS forecast of 90 cents compared to $1.05 in the prior year quarter. Finally on Friday is Wells Fargo and Company with an EPS forecast of $1.01 compared to 98 cents in the prior year quarter. Now here are 3 Canadian stocks to watch next week. First up on Monday is Cirrus XM Canada Holdings Inc. with an EPS forecast of 2 cents compared to a penny in the prior year quarter. Despite a continuing slide in its stock price, Cirrus XM was named among Canada's fastest growing companies last month by Business and Profit Magazine's 26th annual Profit 500 ranking. Next up on Wednesday is Dragonwave Inc. with an EPS forecast loss of 13 cents compared to a loss of 31 cents in the prior year quarter. Finally on Thursday is Chorus Entertainment Inc. with an EPS forecast of 51 cents compared to 43 cents in the prior year quarter. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure you subscribe to our YouTube channel or podcast on iTunes and find us on Facebook and on Twitter. For Viral Network News, BayStreet.ca, and Hannah Bernard, I'm Brent Stafford.